How's everybody doing today? Today, we're going to be going over a simple PDA array with the ICT rejection block, with the main point being what makes them high probability. I used to see a lot of people pointing out rejection blocks, and they're not the correct rejection block and/or if a rejection block at all, for the main reason of not being a candle that sweeps a previous swing high or swing low, with even better being into a high time frame key level and a higher time frame candle, with there being the 4 hour, 2 hour, the daily, as we see in the example below. All right, and if you don't see the rejection block, you're maybe asking yourself, what is a rejection block? Okay, the rejection block is a long wicked candle, which is going to be the highest or lowest body in a swing high or swing low. Okay, and obviously if we have a VI, right, it's not always the case though. The rejection block in a bullish form is going to be from the candle close to the top of the wick, with the bearish going to be from the candle close to the bottom of the wick. In our daily time frame here, we see that we had a range, right? We swept the internal sell side level into a PD array, formed our daily rejection block with this candle, came into the rejection block low the next day, created a newer swing high, opened the next day, came into what would have been our 4 hour order block, created from this candle, right, to redeliver us and finish out our turtle soup from the range low to the range high. The reasons rejection blocks work are inefficient to price delivery. It removes the wicks, it removes the wicks and shows the real liquidity. Okay, because the wicks themselves can vary. Why do the rejection blocks themselves work, and why do they not work? Right? Every wick and every swing high and swing low candle that looks decently like a rejection block is not going to be a rejection block. We have to base it off order flow, right? After a large dump trading against order flow, you wouldn't expect this wick to hold because there's no old highs or lows with liquidity nearby, correct? You want the rejection block to be instantly traded to, shown with our daily example. You want to then wait for a reaction. They should be instantly traded to and almost instantly from. Obviously, maybe on the 1 minute. If we're in a daily rejection block, it might take a little time, but in comparison on the daily time frame, you can see how we instantly reacted from the rejection block. They should be instantly traded from, and with it now being protected as a protected swing high or swing low, right? And then this turns into a high resistance liquidity run if it wants to be ran. Right? And if we don't have a good rejection block, we want to wait for the soup with the wick being filled to and through. The highest open low counts as an accumulation phase, and when retraced into the order block, it should then distribute towards opposing liquidity. As we said with the previous example, along with order flow, super long wicks are bad because they want to be filled all the way through or all the way to and through. You want to have a decent ratio of a 1-to-1 body to wick ratio. Okay, and as we see in this example, it's not a perfect 1-to-1, right? But we aggressively hit our key area, closed, and then with the next candle, failure to close in, or failure to close below, right? And even sweep the candle low, we instantly reacted and traded higher. Even if it's a bad rejection block, you can use it for a retracement and then continue out to take out the low, right? So you see a bad rejection block near or under a buy side or sell side level, you want to see us take our jab a little bit lower than we do, fill the wick to and through, create a good rejection block into a key level right within our high time frame key level, right? And as always, we tap into a high time frame PDA, sweep liquidity, displace away, and have a large wick. And when I say displace away, and just to make sure you understand, when I say displace away, right, we have an accumulation level, we displace away from it, and then displace through it, and then come back and close and or continue higher. And of course, without time, nothing is high probability. A daily rejection block, usually on a Monday, makes no sense. A 5-minute rejection block won't hold if there's no time-based liquidity swept into a PDA array. Alrighty, so here we have NQ on the daily time frame, right? We can see we accumulate within a range, sweep the range high, right? Deliver bearishly, come back to the order block, right? And sweep an internal sell side level into a fair value gap. Okay, so then we wick up, close, all right, and then on the Monday, see this is Friday, on this next Monday, we open with a inwog, a bullish inwog, and we respond bullishly, and don't stay in here for much time. We barely reached the candle we didn't even reach the candle close bottom. That's how quickly we responded. Okay, so we come down here on our 4-hour time frame. We see our order block. Just how as up here we came and responded to the order block. Expect the same, right? We see a thick down close candle into our order block after sweeping a high time frame liquidity level. So this low is protected. So this low so within our high time frame rejection block, we have our order block right here. Okay, so we come down, respond, close above the order block. So what would you think would happen next? We've swept an internal sell side level. We'll just put it here so it looks better. Why does it keep doing that? Sweep an internal sell side level with a thick bearish down close candle into our PD array with a protected low below. Go down to the 1 hour. Just quiet for a second because I wanted you to think to yourself, this is the rejection block. Okay, see how this candle sweeps into the PD array and fails to close below the previous candle. The 2-hour candle as well. You see on the 15-minute, we had a thick down close candle sweeping lows, leaving a fair value gap with a decently sized wick. The next candle instantly responds, creating a low time frame CISD. We see our 5-minute candle. It's a nice 1-to-1 sized body to wick after sweeping a previous day low as well and having an SMT. This low should now be protected. Good Lord. What in the world is going on? Alright. Within our 15, we have our 4-hour rejection block, 1 hour, 15-hour rejection block, 5-minute, we create an order block. And we see within our either turtle soup model 2 or 3, can't remember off the top of my head, we have our candle close, as well as the high time frame. Where was it at? High time frame closure within. Same with our, as you'll see in our daily bias video, right? We have a daily candle that sweeps the previous day low, and failures to close within is often likely showing a sign of reversal. Okay. So we have our rejection block model into the rejection block. And then within our rejection block model, you'll see a version of the CISD model. We have our CISD order block react, react to the 1 minute rejection block, right? See how this candle, or wait, which candle was it? Oh yeah, this candle sweeps lows into the order block, then we instantly close upwards, come back quickly on the 1 minute time frame, right? Almost seeing this rejection block wick as an order block, CISD order block, boom. Can be seen almost as the CISD model, right? But you're just getting in a little bit lower, so you could say that you might have a less chance of getting filled. But with just reading price action, right, it's not a pattern. It'll be different each time. Even coming in for a better entry, load up. And even here, right, getting in one, then just, knowing where the draw is, getting in, blah, 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 blah. Right, I'm just gonna get in there, whatever. And then we go to hit the first buy side level. So we can see all within the same candle recreate the 5 minute, 15-minute rejection block. We create a 90-minute rejection block, a 1-hour rejection block, and a 4-hour rejection block. All right, another key note coming into this rejection block, right? We see on the 4-hour, come in, close, watch how our next candle, watch how our next candle will open. It will open, come low into the rejection block, open, low, high, close. Right? And then we continue higher. So I wanted to show as well, delete this off the screen, show when we have such a high probability rejection block like this, when is the best time to enter? Me personally, I hear a couple different things. Me personally, I'm entering 1 second before the 1 minute close of the 5 and 15 minute candle. Okay? This 5 and 15 minute candle closed the same like this. Both candles are a rejection block. And also, let's get into the 10 minute. So, okay, opens at 10. Yeah, so seeing our 1 hour candle, right? We're 15 minutes in the future from our 1, 5, and 15 minute candle close. Okay? We're at the 45 minute point of the hour. So we're buying in this wick, right? See, within this square, within the thick 1 hour candle. Okay? And if you've been noticing, right? For the high probability A plus rejection blocks, as we saw in the notes, we have a larger wick, right? And then you see this wick was too large. We filled it. We didn't sweep. Also, we didn't displace away. Well, we did. We left a fair value gap, but the next candle hadn't closed yet. All right. But you see with this candle, we displaced downwards, left a 5-minute fair value gap. We left a 15-minute fair value gap. We responded and left a 1 hour fair value gap. Okay, and if you saw a 4-hour candle like this, you would assume that it would keep going lower, right? If not just how we think, but any normal person seeing this candle, right? See it as a market structure shift to continue lower, right? That's not the case. All right, so we displaced away, have a large wick, sweep a liquidity, an internal liquidity, right? We don't go external because external is protected, right? You're not always going to have this perfect turtle soup low. Okay, you can't, you can just wait a year until one like this shows up, right? But unless we're at all-time highs, how are you going to short, like perfectly like this? And right, see, this isn't even perfectly longing because you can always look back and, long again. Right, and you can be like, oh, you should have been long from here, but this is like a super long time frame, right? We're intraday trading. We trade once or twice, shit, 3-4 times a day. All right, usually never that, but if we're getting some A plus setups and you have multiple accounts open, we can get up to 4, 5, 6 sometimes. And not all of them are A plus high probability, right? But somewhat, well, short time frame scalps. But anyway, I'm yapping, right? We come up close, right? With all of our time frames aligning, we look beautiful. Okay? We come in to our 10 a.m. candle, right? And we already had our open. Where is it? Our open, high, low, close. So with this 10 a.m. candle, as soon as we come under it, you should be able to buy. Bam. You're under your 10 a.m. candle in the 1 hour rejection block within the wick, right? 10 a.m. Alright, just a little bit under it, right? Can't get fully in the wick. Come a bit low, right? And what we're doing here for our 4-hour candle, you see we have our accumulation, but mainly I'm looking for our open to come under the candle into the 4-hour rejection block. So we opened higher, came up, smaller time frame accumulation, manipulation, distribution, into the higher time frame 4-hour open, low, and then continuing higher, right? So then you had your and you'll be able to see it here, just split for like a split second. Your open, low, high, close, right? And it's lovely that TradingView gives you that little second to see the candle open, low, high, close, all aligning with our high probability rejection block, responding from a higher time frame rejection block to rejection block, right? Pretty simple to understand. And coming back one more time to all of our time frames aligning, right? 5, 15 minute, and then we showed how we came up, right? Higher for our open, high, low, close to be able to come lower for the 4-hour. So I come back to this point to show how I enter these. Okay, after seeing a candle like this that aligns on all time frames and has a thick 1-hour close, right, leaves our fair value gaps and sweeps liquidity levels, I'll enter here with this type of stop. With just below it. Okay, and that was showing also where you can just set a limit here if you don't like marketing, and you can wait for us to either, CISD and then come back into the order block rejection block, and then we'll see how that would have worked as well, right? On this candle close, you can set your limit, comes in, fills you, right, and then finish our model for the open draw. Then we can aim for our pre-market liquidity. And then we have some Monday lunch liquidity and PM news, or sorry, PM liquidity built up here as well. 3 low resistant lows, 1, 2, 3. Market maker buy model. You can see our smart money reversal delivering from a high time frame key area. Accumulation model with the low time frame accumulation, manipulation, distribution with your higher time frame accumulation, manipulation, distribution. We're seeing that. Accumulation, manipulation, distribution. Accumulation, manipulation, distribution. Different time frame levels, all still relevant. Sweeping the previous day into, or not the previous day, but sweeping liquidity overnight. And then low resistance for the morning. And then we continue to fill our buy model. And I'll just get out here because I'll just get on the 1-hour. Finish our buy model here going into Wednesday of the week. And here's where we come back to the notes, because what I'm going to tell you is you need chart time for this. This isn't, you know, you learn the CISD model, then you see this and you're like, oh, better entry, I'm gonna do this, because more likely than not, you're gonna get your ass stopped out on getting out at the bottom of the wick, because we most likely had an SMT there as well. You're in within a 1 to 5 minute decision of, wanting to get in with that candle close, and within that 1 to 5 minutes, a lot of kids might shit themselves and even get in then, or just start tripping out or doing whatever, right? You gotta stay confident, especially buying that low after displacing, right? We can see a lot displacement lower, but with our market structure and our PD arrays that have failed and not failed, we see all of our low time frame failing. We're low time frame bearish, but high time frame, we're just retracing back to the order block. Okay, nothing to be nervous or scared about, right? So scroll down through the notes one more time so you can read them all, right? And just go back test this. I have a video coming up soon of how I back test what I look for, but this right here is what needs a lot of the back testing, right? For have the entries that I have the entries on with rejection blocks, entering on the 1 minute candle close, the 5 minute candle close, the 15-minute candle close, right at, as we saw for that example, 9:45, right? And you'd be like, oh, well, you need to wait on the next candle's 15-minute open, high, low, close, right? What if we open higher, wick down, and don't touch the order or the wick, right? Because we're responding that quickly. And it's not a what if situation, but it's more less me feeling comfortable getting in there, seeing how we reacted a million times in a high probability rejection block area, and seeing what it does. And with those high probability time frame alignment rejection blocks, I'm I'm throwing a mortgage on trades like that. Like, those really stand the test of time, and make sure that you know that the low is that the low is high resistance, and that it's not going to get taken. And then your second swing low that engineers liquidity for our failure swing for the turtle soup is not going to be broken either, and we're going to continue displacing higher. Alright, wanted to make this video short, simple, because there's not a lot to it, right? Where there's a lot to it is getting on your own chart and being able to see candles like this, knowing which ones fail, which ones react and hold up. And adding this, if you haven't had it added and you're close to profitability, sometimes something like this can hurt you, because you've looked so closely into other areas, and trying to see one PD array that you may have not heard of might hurt you. But this PD array, for how Turtle Supers trade and how I trade, right, this can get me in below the order block, right, in the rejection block wick, and then I can even get back in on the CISD, right, or not in on the CISD, but see us have one, then come back to the order block and react higher. And we also saw within our high time frame, our CISD model of breaking, having a CISD above the previous swing high, right, coming back lower, reacting to the order block, and continuing higher. Model 1s everywhere. Want everybody to have a great week, great weekend, whatever the day of the week you're seeing it. Alright, have a great week trading, stay safe, and I'll see y'all next time.